Hello guys, welcome back. So now we are in withholding tax, right? So in withholding tax, in previous session, I just explained a scenario, right? Like deduction of tax in the form of expense. Say for example, if the vendor is there, like whichever vendors are there. So certain vendor says that no, whenever like I'm going to send any invoice, I need a full payment, right? So here full payment, how it is going to be done? Let's suppose we have the rent invoice itself. So the rent account is going to be debited. This is what amount we have received, invoice amount. And vendor account is going to be credited. So till now what is happening guys, if 10% TDS, then vendor is going to be credited with 900 and TDS payable account is going to be credited with 100. This is what the normal entry which is there. Now here what is happening? So in scenario number 2, where vendor says, this is scenario number 1. Here vendor says that I need whatever invoice amount is there, I need the equal payment, not less. So if vendor is going to be credited with 1000, then only the payment is going to be made worth of 1000 rupees, right? So now, but the tax deduction is mandatory as per in the law and all, right? And who has to deduct the tax, guys? Of course, it's Tata Motor who has to deduct the taxes. Tata Motor is going to be responsible to for this tax deduction and all. So no matter whether they are going to pay from their own pocket or whatever it is. So in this case, of course, Tata Motor is going to pay from their own pocket. So this liability will be there. What should be the offsetting GL, guys, of this one? So offsetting GL will be TDS expense. TDS expense account is going to be debited. This is how the entries are going to take place. This is scenario number 2. So what we have to do, guys, first of all, so now these details we are going to enter right now at the time of posting invoices. This is going to be determined by system because already we have done the configurations and the GL account is assigned. What about this account, guys? So this is also supposed to be determined by system automatically. Offsetting GL is going to be determined by system automatically. How it is going to be determined, guys? I'll tell you. So first of all, now, so here the major role is of tax code. Okay, with the help of tax code, system is going to determine that whether offsetting account will be a GL account or offsetting account is vendor account. See, what do you mean by offsetting account is GL account, offsetting account is vendor account. So offsetting means, see, the tax 10% got deducted, 10% is going to be calculated. So this amount is, so what is the offsetting account means? This where this credit is going to be adjusted either on this one or this one, right? Where this offsetting is going to be adjusted on this vendor or this one. So till now, guys, what is happening till now? Whichever experiments we have done, whichever scenario I have explained, in every cases the offsetting account is vendor only. Okay, But right now, what is happening, guys? The offsetting account is a different ZL. So what we have to do, I'll tell you now. So for this one, you just do one thing. I think this is, I'll have to log in once again, guys. So where is my configuration? In server number 1 or 2? Server number 2, right? So here, go to SPR. So what we have to do, we have to make one change. Okay. If you want to set up a new tax type, a new, of course, for this one, right? For this scenario, we must have to set up a new tax type, a new tax code. Okay, new tax code creation is required, guys, because here in the existing, see here for the practice purposes, what is happening? Of course, we are going to make the experiment in the existing tax code itself, right? But whichever conditions are there, for every conditions, a different tax codes are going to be set up. Okay, now so here, now so go to calculations and here our tax code. Okay, so now I think TM and T1 we have this T1 we have this defined, right? And then T3 is there, right? So let's suppose I'll create another T2. I'll use the tax type. Which one, guys? Tax type will be like the previous one in the sense T1 itself, and here the tax code will be T2. Don't be confused. Earlier, what I have done, guys? Earlier we have already created certain tax type and tax code. So T1 was set up against a single tax type. We can create multiple tax code, guys, because tax type is having a different control and tax code is having different control, right? The only thing is in a vendor master, one tax type cannot be entered twice. If you talk about like combinations, right? So in combinations, what is happening, guys? Same tax type. Like let's suppose I said here tax type T1 and then T1. This we have assigned to the vendor master. Tax type T1 and T2. So both cannot be assigned. Both cannot be assigned. Why? Because same kind of tax type and here tax code, right? So let's suppose this we have created for rent, right? So again, two different percentage will be there, right? Two different percentage can be there if vendor is going to deliver two different services, right? So if two different services are there, of course, two different tax type will be there. We can't say that vendor is delivering the same services and two different tax percentages will be there, right? Always vendor will fall under a single percentage only. If vendor is delivering two different kind of services, in that case, two different tax percentage will be there. But of course, in that case, tax type will be different, right? Now, so this one we have defined earlier. Now, tax type will be same and tax code I am going to create new one. So now here percentage subject to tax. This is already explained, guys. Very simple logic is there. Whatever invoice base amount is there, right? That invoice base amount is whether the 100% is subject to tax, 90%, 70%. If someone want even can perform testing. Okay, it's a kind of assignment for you people. You can perform the testing for this one. Okay, so here I kept 100% and 10% tax. So overall, the game is there here to the posting indicator. Okay, so it's posting indicator, guys. It's a posting indicator which is going to decide whether the tax payable, whatever the tax payable is there, right? So in the offsetting account, okay, offsetting account of this tax payable will be either vendor account or this GL account. So what I said here, it's posting indicator by which system is able to understand that for this tax payable, the offsetting account is, look at here, the offsetting account is vendor account. Okay, here offsetting account is not the vendor account, a GL account. Okay, so okay, so look at here, guys. Now, first one, standard posting. Okay, so now here what is going to be reduced? Bank, vendor, customer line item will be reduced, right? So of course TDS here only for vendors, right? So that is going to be reduced. Now second one we are having offsetting entry GL account and offsetting entry GL account. We are having posting indicator 2 and 3. Posting indicator 3 we are going to use, guys. Okay, 2 is going to be used for country specific setting. This posting indicator 2 is particularly for Argentina. How you will come to know? Let me check here. Yeah. So here the details, right? That 1, 2, and 3. Okay. Option 2 is used in Argentina for foreign vendors. This is a country specific setting, right? If you see the calculation, that calculation is different calculations. Our calculations here is pretty simple, but in Argentina, whatever the calculation is there, just do one thing. I'll try to calculate it. It is simple only, but I'll have to check it. Okay. So till now, posting indicator, we are going to use 1. Everyone is going to use 1 only, guys. No 2, no 3, and no one knows like what is the use of 1, what is the use of 2, what is the use of 3. Simply assign a posting indicator 1. That's it. But the question is, what is the control? Right? So look at here, a very small setting is there, but it is having a control. It is having the impact, right? So right now, make it 3 and save it. So now we are having tax type and tax code, right? So again, against this combination, the GL account must be assigned, guys. Which one? This TDS payable first. Now, so TDS payable we already created. Go to FS double 0. TM33, right? Okay. So 2002. So here, this assignment, right? So assignment will be, no need to define the formulas and all. Now company code. So tax type is already assigned. We are using the existing tax type, right? This extension activation is already done. So here, what is happening? You define here at TM33. So here T1 and T2, and I'm going to use same 2000 people. Save it. And this tax type and tax code must be assigned to the vendor master. So XK02, give you a vendor master, total tax, press enter. So look at here guys, if we are going to assign T1 and T2, press enter, we got an error. An entry with the same withholding tax type is already exists, right? So here T1 is already there, so system is saying that no, same tax type no. So delete the row, XK02 once again, press enter. So either we have to delete this one first and then save it, then we will be able to assign now here T1 and T2 and save it. System will be able to accept this, right? And since let's suppose you can remove this one because both tax type and tax code will appear over there at the time of calculations. Just save it. Okay. So what we have done, we have assigned this one. Okay. So once you post the transaction, guys, once you post the transaction, so whatever transaction is there, press enter. Number range 33 is missing, so someone has made experiment. Okay. Once again at B60, press enter. Now it's fine. Simulate, press enter. So here, no, why it is getting calculated, guys? T3. Why T3? T3 we have already, okay. This one's supposed to be right. I just disabled wrong one, right? This is why. So the wrong one I disabled, that is why. So again FP60 guys. Now look at here, T2. So if you simulate, then we are getting error. What is the error, guys? Account determination is not defined for transaction OFF. Okay, in chart of account TM33. So what is happening, guys? Look at here, account determination not defined for transaction OFF. OFF is for what? It is for offsetting account, right? So here, look at here, system is saying that you can specify. If you don't know the path, you click here. Directly it is going to take you and give you a chart of account. And here we have to assign, but it is gray mode. It is coming in gray like somebody is already there inside. So click on back button. Even via path, how we can cross, how we can reach? Pretty simple. Here itself, define withholding tax for offsetting entry. So you execute, press enter. Okay. So now here, tax type and tax code. Save it. An offsetting entry. So you must have to create one expense account. So we have created one TDS expense account. And this 4005 we have assigned here against offsetting entry with deduction. OFF, right? Now what will happen? Now if you simulate, press enter. Now look at here, TDS on rent and TDS expense. Liability is getting credited and expense is getting debited, right? So this is how it is going to happen. So in this case, like let's suppose if the TDS, if we have to set up TDS as an expense account, then what is the role, guys? This control is there at tax code level, right? And in tax code, where? So under posting indicator. What is the use of posting indicator? So posting indicator determine whether the whatever the TDS payable is there, right? So against TDS payable, the offsetting is going to happen on a vendor. Offsetting account will be vendor account or ZL account, right? Okay, this is the one. The next one is, we come back here. Then go to calculation. Instead of 3, if you are going to make 2, then save it. Okay, this is a country specific requirement, and that too, as you have seen, it was showing that this is for Argentina. In Argentina, also posting indicator 2. So, guys, that is why SAP is too vast. Look at here how they have, like how, especially how they are like for like posting indicator, right? For entire world, we are having 1 and 2. But for one country, one particular country, since they are having a different calculations, so what is happening? They have delivered another posting indicator, right? 3. So here, if you select 3, the calculation will be different. Just save it. Sorry, not 3. Posting indicator 2. 3 is for offsetting GL. Offsetting account will be GL account that we have tested. Give posting indicator 2. Here offsetting account will be GL account itself, but grossing up a different calculation procedure is there. Okay, I'll not post this transaction simply. I'll come back once again. And here, if you simulate, system is saying that the entry GRU is missing in a particular table. So here, for this country specific setting, okay, whatever offsetting GL is there, that is going to be assigned somewhere. That is there, where it is here. Okay, so GRU, gross up here. Select, execute this. So T1 and T2, and offsetting. We have created 4005, that itself I'm going to assign. Posting key not defined. So cancel and then give your chart of account. First of all, you define posting key 40 and 50. So posting key is not assigned here. What does it mean, guys? It means I'm the first person who is making this testing for this one. Click on assign here. Okay. Now, so chart of account wise. Okay. What we have to do, give T1. Okay. So what we have done, guys, this assignment we have done. But we have to check the calculation, how the calculation is happening, right? Now let's have a look. So look at here, guys. The calculation is a bit different. How this calculation is happening, guys? Can anybody guess? Why 1100, 11.11? Okay. So for Argentina, I'll just give a very brief explanations. Okay. There may be when in future you guys are going to get any project from Argentina. Okay. So here, how TDS is going to be calculated? The calculation will be here. Okay, just wait. Let me Try this battery charger. So here, how the calculation is happening, guys. So the calculation will be 1 divided by multiply base amount. This is what the formula. Okay, on this formula itself, this tax is getting calculated. So here what is happening, guys? 1 divided by P minus 1. P equals to what, guys? So P equals to just P equals to what is happening, guys? P equals to tax percentage, right? So now here, so first of all, 1 divided by I think some. Okay, now I'll just do it. Okay, now I'm sloppy. 1 divided by P, it means 10% minus 1, and then multiply okay, so 1 divided by 9 multiply 1000, right? This is how. So if you use calculator here, so 1 divided by 9 equals to this much, right? And multiply what, guys? Multiply the base amount. Which base amount, guys? Whatever invoice amount we are receiving. So invoice amount is 1000. So multiply 1000. So look at here. This is what is getting calculated. Okay. Manually, I have just shown you guys. Generally, it is not required because this configuration is already delivered by SAP, right? And in background, there are multiple associated programs are there by which system automatically is going to calculate with the help of this formula itself. Okay, so that is why here finally this is the tax amount which is supposed to be posted, and which tax amount is getting deducted here, guys? Same amount is getting deducted. So this is just a country specific setting, guys, right? For a particular country and that to a particular vendor, right? Earlier I had such kind of requirement we have seen earlier, right? For a small duration, there was a project from Argentina. So now, so this is how it is going to happen. So here, once again, I'll come back. So what is happening, guys? In that case, in the scenario number 2, where somebody says, like, let's suppose, can we calculate this TDS as a, can we maintain TDS as a expense? If you say yes, then they will say, okay, what is the procedure? What do you have to say? You have to say that we have to define a new tax code for that. And while defining the tax code, we have to make sure that the tax, whatever this tax indicator is there, right? The tax indicator itself is there, right? Or something else. The tax procedure indicator. Okay. So, anyone? So what is happening, guys? This posting indicator, right? So posting indicator. So what I have to say, yes, it is possible. The only thing is, first of all, we have to define a new tax code. Okay. While defining the new tax code, we must have to select a posting indicator. Okay. We are having another posting indicator called 3. So if we are going to select 3, then what is happening? Then the logic behind offsetting entry is going to be changed. Okay. As per current situation, the offsetting entry, in the sense offsetting entry is going to be our vendor account. Now, once we change the posting indicator, then offsetting account is going to be treated as a GL account by system. So this offsetting GL account we must have to create, and that is also going to be assigned. Okay, for automatic account is it is going to be assigned. So ultimately, you must have to say that it's posting indicator by which this TDS as an expense calculation is possible. That's all in this session, guys.